I lost so much money.
The market has dropped a lot, and I want to make sense out of all this madness. Let's say you're brand new to the investment world, or maybe you've been investing for a while. You might be wondering, what are we supposed to do? Should we sell the stocks right now? Should we buy more? Should we invest in cryptocurrency? Should we buy gold? What are we supposed to do? It's like a casino out there. You might as well go to Vegas and play with that guy. Sick of the stock market? Let's go to the roulette table and bet it all on red. Or maybe you want blue? Maybe you want to double up on blue and have 2 blues. Or maybe you want to go 2 reds? What do you think? I think doing it this way is going to lose you money. Yeah, weird. Place your bets. Hi, my name is Andre Jick, and today I want to be really honest with you and tell you that I had a hard time making this video because there's so much going on in this world. There's so much noise. People are panicking, they're selling their investments, and I had a hard time structuring this video in a way that's easy to understand, in a way that helps you, in a way that entertains you, and hopefully gives you the information that you need to know without being too confusing, because it's so easy to just throw around complex data, complex words, say a lot without saying much at all. And I don't know about you, but whenever I get confused and I personally turn to the news and I try to get an explanation of what's going on, I get way more confused by the end of it. They mention words like quantitative easing, yields, treasury bonds, negative interest rates. It's hard to make sense out of all of the intricacies. So in this video, I'm gonna try my best to make it as useful and as fun as possible so that you can have some actionable advice on what to do in this crazy chaos that is this world today. So here's my solution. First, I'm gonna try to explain what's going on in the first place. Secondly, I'm gonna try to make sense of why it's going on. And thirdly, I'm gonna show you exactly what I'm doing with my money right now by putting my money where my mouth is, literally. Except not literally, because that'd be really unsanitary, but I'm gonna take you behind the scenes and show you step by step what I'm doing with the Robinhood app, and I'm gonna show you exactly what I'm buying. You can follow along if you'd like. So let's get started, and first, let's break it up into bite-sized chunks. That was stupid, I'm sorry. So here's the problem. Right now, this is what people are experiencing. It's not necessarily what they're seeing, it's what they're feeling on the inside. Let me show you.
Global News today announced that the Federal Reserve will print more than $700 billion to bail out the banks in what is being called as the world's largest economic crisis of our time.
Riots have taken to the streets as the Dow Jones plummets more than half its value. People have lost their homes, pensions, and have resorted to violence and protests worldwide.
Imagine that's what you saw. Even my YouTube comments are like,
this guy had to have lost 100K this week.
So without further ado, there's no better way for me to show you what's going on than to show you my Robinhood portfolio right now. So let's take a look. So you can see last week, my Robinhood investment portfolio says I was worth $204,000. And today, that's 7.94% lost, or $188,157. That is a $16,237 difference. Now, I don't know about you, but $16,000 in a span of a week, it's kind of a lot, because I don't make 16 grand a week typically. I mean, not yet. I was told YouTube money was gonna be good, but it's not quite there yet. Maybe someday though, I hope I'll get there. Now, it's 8% now, would you look at that? Oh, 8.13%. I just lost $400 in a few seconds. This is fine, this is normal. Everything is gonna be just fine. Terrifying, right? Don't worry, if you're an investor like me, we are all in the same boat. Everyone is panic selling and getting rid of their stocks. In this 1 week alone, we have lost 8%. And what does that mean, Andre? 8%, like how bad is that really? Well, just to illustrate, 8% means that in this 1 week alone, we have lost the equivalent and have taken a step back as 1 year's worth of progress, just gone. That means if you've been investing for an entire year and you watched your money grow for 365 days straight, 8% is exactly how much we've lost in 1 week alone. Banks like Goldman Sachs are predicting that we're supposedly going to lose another 7% this year alone, which is almost another year's worth of progress that's projected to be erased in 2020. That means that we might have the worst week for stocks since the crash of 2008. But guess what? I am looking forward to it. I want to lose more money. That's a weird thing to say, right? Before I started investing, I never in a million years thought I would be happier having less money. But I am happier right now having $180,000 in my Robinhood account than when I had $200,000. Why? Because even though having $200,000 is cool and it makes me feel like I have a larger net worth, strokes my ego, yeah, sure, it feels nice, but guess what? Fortunes and passive income streams are not built during bull markets. They're built in times like this when everyone is panicking and when things are in free fall. And I can think of no better situation to explain why this method of investing is so incredibly exciting right now. Here is why. Let me take you back to 2015, reverse time lapse. And we're here. It was my first stock market drop experience. I went from having $132,000 drop down all the way to $114,000, which is roughly $18,000 in the span of 7 months. Now, mind you, at the time I was making roughly 50 or probably 40K per year at that time. So that's half of my annual salary gone in 7 months. Maybe this stock market investing thing isn't for me. I'm happy with just saving my money rather than risking so much of it. You know, it's not for me. But luckily, I kept going. I kept buying more and a little bit more. And I took a breather and I took a step back and I realized what I learned from that whole experience was sometimes it's okay to just sit back and not to make extreme decisions based on fear. Luckily, the market did recover, but 2 years later, in 2018, I was about to be tested again. And this time, it was far worse. At the end of November 2018, I was worth roughly $173,000. And in the span of just 3 short weeks, I went down to $154,000, which is a loss of almost $20,000. To lose that much in such a short amount of time, in just 3 short weeks, would drive a lot of people insane. But luckily, I had experience losing money, so I was all right. I kept on buying more in a time when a lot of people were saying, this is the beginning of the end. I called it, you should have sold those stocks. But it kept on going upwards and it recovered and I kept on buying more and more. Here's the thing, as a dividend growth investor, I feel good about being a grower, not a shower. I don't know what that means, but I guess if I was holding on to Tesla stock and I bought it at, let's say $900, I would be very tempted to sell it. If it dropped down to $700, I'd be like, I should have sold it. You know what? I'm gonna get rid of it now before it drops even further. Of course, in the ideal world, you would never sell your growth stocks because you are an investor, not a speculator, right? But I'm just trying to demonstrate that it becomes a lot harder to hold on to growth stocks when you see a year's worth of progress gone in just 1 week, unlike a dividend investor who is really happy when the prices go lower because my income will stay largely the same, assuming the company is still profitable and it's making money and it doesn't cut its dividend. I can hold on because it's going to continue paying me passive income regardless of what that stock price actually is. It's an incredible feeling. And here's the thing that most people don't realize. When you're buying stocks, you're not buying stocks. You're buying parts of a business. And when you're buying them, it's harder to see that because you're not actually seeing a physical thing. It's just somewhere on your phone. And when you buy a stock, it doesn't feel heavier. Your phone doesn't get bigger like when you do with real estate. You can physically see it. So it becomes harder to hold on to it. So always remember to think of stocks like you're buying parts of a business. It's like, imagine if your house lost $10,000 in value tomorrow. Would you just sell it and panic? No, that'd be silly, right? You would just continue living in it. It's still a house. It's all the same thing. You can still invite people over to Netflix and chill, so fundamentally, nothing is different there, right? But imagine if your house was a stock. It would be so easy to sell the house. It'd just be like, swipe, and now you're outside. That'd be terrible, right? But another thing is, imagine there's a dude standing outside your house constantly yelling at you about what he thinks your house is worth every second of the day. Just imagine.
125,000, 205,003, 207,002, 201,300, 210,200, 220,300, 207,000. 7,300.
Okay, so why is this all going on and what is going on exactly? I always look at the smartest person in the room, and right now that is Warren Buffett. He did a sit-down interview with CNBC, 2 hours long. I watched the entire video so that you wouldn't have to. And the biggest takeaway that I got from watching that video was this.
I don't think there's any way to predict what the stock market will do 10 minutes from now, 10 days from now, or 10 months from now. 20 or 30 years from now, America's business and probably over the world will be far better than it is now.
Wow, even the smartest billionaire has no idea what's gonna happen in the short term, because if he knew, he would sell all of his stocks, he would wait until the bottom, and then he'd just buy back in. But he doesn't. Because he can't. Because no one can. And if you come across somebody who claims to be able to, run in the opposite direction and do not buy their course. And if things like quantitative easing, share repurchases, negative interest rates are scaring you because you understand that they are propping up the economy, then yes, those things are probably helping. But nobody, including Warren Buffett, knows what that all means in the long term for the economy. All we know is that the government right now is trying to stimulate the economy by making people like you and I, the consumer, buy more stuff. And they do this by making money cheaper to borrow. So they want us to go out and buy houses, cars, and anything else we need to borrow money for. And that brings me to the most important point of what Warren Buffett was trying to say. And that is, adapt your consumption to your income. Don't adapt your income to consumption. Basic financial minimalism and frugal core principles, in a fancy way of saying, don't spend more than you earn. And don't be tempted to chase higher yield investments, as interest rates could potentially drop even lower. It's gonna get tempting to go after cryptocurrency because that's where all the action's at and that's where you wanna invest. But doing this may potentially hurt you, so please be careful. And ultimately, it begs the question, if the smartest investor in the world has no idea what's about to happen, then why did I make this YouTube video? How pompous does my ego have to be to justify this video's existence? Why is anybody watching me? It's ironic, because the smartest guy in the world is like, I don't know, just keep buying stocks. In the next 20 years, you'll do all right. I love that. But if you're one of the people who messaged me on Instagram saying, Andre, I sold all my stocks, what do I do now? Here's what you should do. If you sell your stocks because you're too afraid of losing money, then remember this. The stock market's biggest gains typically occur within a 10-day window period. And if you miss those 10 days, specifically 6 of those biggest 10 days, then your returns can be cut by as much as 50%. What's crazier still is that those biggest returns typically happen within 2 weeks of the worst 10 days. So if that didn't make sense, just hit the J button on your keyboard twice, go back 20 seconds, and I promise it'll make sense. But what this means is that we could see a horrible 10 days straight, and then 2 weeks later, see the biggest recovery that we've ever seen. And if you miss that period, just please don't miss it. Just don't miss it. It's not worth it. Bad news bears. Here's what I'm doing. If you're curious, I'm not selling because I don't want to miss that train that is the recovery. Instead, I'm using more of my money to buy more of those income producing stocks because as a dividend growth investor, I see opportunities everywhere and I'm so excited to buy more income producing assets. So let me show you exactly what I'm doing. If you open up the Robinhood app, you'll see exactly what's going on. So I'm gonna look up DAL, D-A-L, Delta Airlines, and I've always wanted to own the airlines, but they've been so expensive, and I feel like right now they have been hit so hard. Just look at that graph. In the monthly and the weekly chart, they have been beaten up so much. But do you guys think that Delta Airlines is gonna disappear overnight or next month just because of this? I don't think so. Who else would we entrust our luggage to get lost? Delta. Don't expect luggage to arrive. Okay, so I'm gonna look it up and I'm going to buy 20 shares of Delta at $49.50. The order was actually filled at $46.27. Remember to put in your limit order if you ever buy stocks on Robinhood. And this means that on top of the stock, hopefully growing in value in 20 years, I'm also adding a dividend income per year of $31.28. Also, their dividend safety score is rated at 61, which is considered safe. I think they'll do just fine. They'll get through this mess. And 10 years from now, they're gonna be worth a lot more. And while they grow in share price, they're gonna be paying me as a shareholder. I'm glad to be an investor. That sounded like a sponsored message. Totally wasn't. The second stock I bought is ExxonMobil, and I'm dollar cost averaging into it, and every time I've bought ExxonMobil, I've lost money on it, but if I liked it at a higher price, I should love it at a lower price. Makes sense. So I bought exactly 20 shares of ExxonMobil at $53 per share for a total of $1,060, adding a forward dividend of $65.40. And as usual, once I buy the stocks, I will plug in the ticker symbol, how many I bought, what the price was, and it will automatically keep track of them. It'll show me the sector, the annual income, and little things that I can glance at real quick to show me the growth. I really like it. Self-promoting humble brag, because nobody sponsors my videos. And while you're at it, go ahead and claim your free stock from Robinhood. Go download Webull, fund your account $100, claim 2 free stocks, one of which can be valued up to $1,400. Follow me on Instagram, and above all, please remember that I'm just a stranger here on YouTube showing you my personal finance journey and investing, and that I have no clue what's gonna happen. But I do know 20 years from now, none of this will have mattered, and the world will be a better place. And 20 years from now, you'll regret not having started today. Love you, enjoy your weekend. I'll hopefully see you lovely people back here on Monday, Friday. I'll see you soon. Bye-bye.